How's it going, peeps? Welcome back to Viva La Coin. I am Joe. I will be your host for today's episode. And as you can see, there is pandemonium in the streets. Everyone is panicking. Bitcoin is down. The whole market is down. And everyone's same question is, why is this happening? Is this the end of the bull run? Should I be concerned? Should I sell everything? Should I sell partially? So what I wanted to do today was to give a little look behind the scenes as to some of the indicators I'm looking at and what I think is going on and where we are in the bull run. Ultimately, talk about some of the reasons why we had this dip and why it's almost necessary to a certain extent to extend the bull run as opposed to collapse it in on itself altogether. And ultimately, I wanted to start with a message first. So I saw across, whether it's Telegram, Twitter, Reddit, wherever people talk about cryptocurrencies, and you have these different influencers, and this includes YouTube as well. A lot of people had a lot of very angry viewers or subscribers jump down their throat and make it really personal and directly insult them because this dip was occurring, even if they pointed it out, which doesn't make a lot of sense to me. I mentioned in my last video that I thought Bitcoin could drop down to 47.5K pretty easily. I talked about that being a heavy level of support for us because a lot of institutions bought, and then we could even wick down to 41K, in my opinion. Now, that doesn't mean I'm bearish. That doesn't mean I believe the bull run's over. However, if I just come on and tell you Bitcoin's going to 1,000,000 and it's going to just fly up and nothing bad is ever going to happen to the price, then I'd be lying to you. I have talked about this time and time again that we have these corrections and we will continue to go through them. Being able to understand why they occur is more important, in my opinion, than anything. Then that way you can make your decision as to whether or not you want to move some of your money into stablecoins preemptively, whether or not you're just going to ride them out. But ultimately, I do not want people to panic. So let's go ahead and dive into the information today. And if you have any questions, any comments, any concerns, leave that down in the comments below. And if you could, like this video if you do find it helpful, or if in any way it answers some questions that you may be asking. Now, at the moment, we are at 49,900 for Bitcoin. We did drop all the way down earlier to 47.5, which ironically enough is the exact price target that I was talking about last night, that we could drop down to in my previous video. So that 47.5 was our low at the moment, and right now that was still holding as support. And ultimately, if we look at just this bull run in general on the weekly chart, what people tend to forget is that we already had a larger correction than this back in January. We dropped from $42,000 all the way down to $28,000, which is a correction of approximately 33%, a little higher than 33%, but still in the 30s nonetheless. A drop all the way down, if you highball it and say we were at 65K, a drop all the way to 47K, even lowball that, is 28%. So ultimately, we didn't even drop as far this time so far as we did back in January. So when everyone's looking at this and saying, oh, it's collapsing, the bull run's over, everyone's flipping bearish or panicking and selling, you have to look at the grander scale. And a lot of new people that just got in, they're saying, oh, I just bought Cardano at $1.25 and now it's at $1 and I'm at a loss. Well, no, you're at a loss if you sell. If you continue to hold it, possibly buy the dip or don't panic, it should recover as we've reversed this trend, which based on the data, I believe that we will. And I'm going to be covering that in a couple slides here. But ultimately, look at the bigger picture. We had a larger dip than this back in January, and based on a lot of our metrics, we were overbought and really heating up a lot of our data that could lead to the whole bull market crashing if we don't have these more severe corrections to shake out the weak hands and those that are over leveraged. And I'm going to show this visual again. I keep going back to this Reddit post, but in 2017, we had several dips all the way on the way up that were larger than the one that we currently have right now. Even the smallest one at 29% was less than the 28% that we've experienced so far in this correction. It was 38, 38, 33, 38, 36, 29, all the way up to the top. Now, obviously, we're going to eventually hit a point where we'll have a dip and then will be the start of the bear market. However, you just can't look at this one dip and say, yep, that's the start of the bear market. We have to look at broader factors and sentiment across the market to be able to make that call. Now, I'm unbiased either way. I believe in crypto. I am fully exposed to it, and I'm not selling all my stuff even at the end of the bull run. But that doesn't mean I'm not still going to protect some of those assets and try and prepare for it if I thought it were the start of the bear market. I just do not believe that it is. So if we look at the cryptocurrency space in total, right now we dropped all the way down from about 2.2 trillion down to right around 1.85 trillion. So still we're pretty much at the all-time highs we were at just about a month ago. It's not like there was a drastic 50% drop in the entire market. And most people that have been in crypto for more than a month or two were still in profit. It's mostly the newer individuals or the media or other people saying that cryptocurrency's hemorrhaging money and everything's falling apart. But in reality, we're still sitting at $1.85 trillion of market cap. And I still think that's incredibly bullish on this trend as we have this shakeout that was duly needed. Now, when we look at Bitcoin altogether, this is how that correction is showing. And we can see that we had that same correction prior, and we have one right now. And ultimately, it's not something that is going to shake me to the core just based on this alone. So let's look at some additional information, see if we can make a better decision as to where we're at and why. So one of the main models that I talked about in my original What is Bitcoin video that everyone is tracking when it comes to the price of Bitcoin that has been incredibly accurate is the stock to flow model that Plan B came up with on Twitter, who is a really dominant Bitcoin analyst in the space. And so far, it has been on point every single step of the way. And the stock to flow model, if we were looking at April 20th, 2021, had the price in the original model back when it was first created, the price should have been right around $50,000. And we were actually $6,000 ahead of schedule, even after dipping down from $65,000. We were still $6,000 above at 56.4K when he put this out, and the model price had us just slightly above $50,000. So when you look about the accuracy of how much the stock to flow model has followed along with the proper trajectory of Bitcoin, it's not like we dropped like a stone completely off of this. In fact, we're actually closer to where we should have been based on this model than we have been over the past month. So that metric is still on. And if we also look at, his sentiment on it, he put this out about an hour ago, said nothing goes up in a straight line. Bitcoin has gone up 6 months in a row until this month. This looks like the midway dip that we also saw in 2013 and 2017. So all those other cycles have still been following that same trajectory. And it has to do with being able to keep the market from getting overheated. If every new person that came in put all their money into cryptocurrency and it was only going up, but they didn't understand it and they didn't know why, and they never had to adjust or have any conviction in that investment, then the moment anything happens, the moment the market takes a downshift, if there's any bad news, if we have, the bear market at the very end, the whole thing implodes and collapses because everyone just has these profits with no real understanding of what they purchased or why they should continue to hold it or what it means for the future. So they dump, and then also you have everyone that's been in it for a while that have these overextended, extremely leveraged trades just going from 0 to 100 that are all making astronomical profits that they're just going to take a lot of that off the table. So every now and then you have to have that dip to shake out anyone that is in profit or overly in profit statistically, or the newcomers or the so-called weak hands in the market, just to make sure that everything is healthy as we continue to climb. Now, if we did have a parabolic run up this month, let's just say we broke every single model and every single scale and we ran to $100,000 by the end of April, I would pull most of my stuff. And that seems counterintuitive because you're like, oh, it's shooting up to the moon, but we would overheat every single metric behind the scenes or in on-chain analysis that we have, and the market would just collapse in on itself. It would go too parabolic. So in my mind, this is good news. This dip, although it sucks, in me looking at my own portfolio, it's not easy. And I'm not saying that it's going to be easy, but there's a reason why back in 2017, most of the people that tried to enter cryptocurrency still to this day aren't multimillionaires. And it's because they either panicked, pulled, or never re-entered after an event like this because they got burned or they lost their money or they over leveraged. So just things to keep in mind as we look at all this information. Now, I pulled up, there was a blog that was breaking down a couple of the on-chain analysis metrics, Satoshi Heist. Never been on this before, but I just want to give a shout out to who put all this information together. And a couple big things I wanted to highlight just so that we can have a better understanding as to some of the things I'll be looking at, and I know many of the actual experts and blockchain people are going to be looking at, is the on-chain analysis breakdowns and what's moving around in the background. So at the end of the day, stock to flow models or all this information is still driven by supply and demand. How much Bitcoin, how much Ethereum, how much crypto is available, how many people are buying, how many people are selling, and what is still available. Now, you can have people dump the charts or flash crash or wipe out a bunch of liquidations, and the price will change and fluctuate in the market. But that doesn't always necessarily show that there is a reversal in people selling all their Bitcoin and all this Bitcoin's back on the market. So we're having massive outflows from exchanges. These two just occurred on Binance back in April 19th. Bigger institutions behind the scenes are buying behind the scenes, over the counter. They do not want to impact the price. When these dips occur, that is when they jump in and buy because they're not going to tether their emotions to this market. They understand that if it dumps, what is the value of it? They can afford to lose a little bit in the short term or pay a little bit more in the short term. But obviously, if they can shake you out and get a cheaper price and purchase the Bitcoin that you sold because there still isn't much available, then they're going to do that. So let's look at a couple other metrics. So there are these waves, and they refer to them as hodl waves, but it's really when people are taking all of their cryptocurrency off of the exchanges, putting them into wallets. And usually in each bull run, we have a couple of these peaks that occur. Back in 2013, we had a couple. In 2017, we had a couple. And right now, moving into 2021, we did have one big peak there and a little bit of a smaller one. But if we're looking at where we're at overall in the grand scheme of things, we're sitting probably about at the midway point, or maybe even slightly over the midway point of this bull run. And that also correlates directly with that stock to flow model. So all those timelines tend to add up. But what else can we look at? So we can look at reserve risk. So the reserve risk metric is the characterization of long-term investors and short-term traders based on the age of the Bitcoins as they are being moved or being sold. Because remember, blockchain, it's all public on the ledger. So we can see what wallets are moving Bitcoins in and out, how long they're holding them for, and whether or not they're selling them. So he refers to people as noobs, but unfortunately, the noob investors are usually characterized in the short-term trader cohort, while the well-informed investors with conviction have strong hands and longer holding periods. Comparatively, we were about 50% heated on this metric. By the way, you can go on Glassnode. Here's a link to go on to Glassnode, but this is all about how many people are holding on to their Bitcoins. And when he refers to overheated, there are certain zones that when we break into, that tends to reset the bull cycle and we crash down into a bear market. Now, 2013, we actually had two of those peaks. It was kind of a double top. And then in 2017, we crossed into that same overheated pattern, and that's when the bear market started. Right now, we're only about halfway up. So we're not overheated as far as how many people are holding their Bitcoin overall long term compared to the amount of people that are trading. However, we were moving up. So resetting that a little bit lower can help extend the bull run. The next one, and this one is very important as to why I'm glad that we have corrections like this, is the NUPL. So that's the net unrealized profit and loss. So this is an interesting chart because when we talk about greed and fear and euphoria in a market, there is a possibility that things can be going too well. Everyone is too euphoric. Everyone is jumping in, like a lot of the new people that just got in and then panicked and sold and had all that kind of blow up on them just over the last month. Once you cross over a certain amount of wallets that are just in profit, but they haven't pulled any of that out, then you tend to see that correction and collapse. Now, the screenshot that he took, because I don't pay for Glassnode, so I can't go on and show you all this myself, but it shows that when we cross over this 0.75 marker, it turns into euphoria. And the same metric was crossed back in 2013 as well, leading us into the bear market. Well, if you can see, let me see if I can zoom this in. We got very, very, very close to crossing that line 3 different times. And every single time we dip back down and we continue to cool off. And part of why I believe that this correction is going to be a little bit extended, a little bit volatile, and scare a lot of people is because even with the previous dumps, we didn't really dump that far. We just kind of bobbed down, bobbed back up, bobbed down, bobbed back up. So we really had to have a swift correction to shake a lot of people out and push a lot of people with weaker hands out of the market or force people to take profits, because we were still, every time we would reset, we weren't resetting that far. We were just moving down a little bit, and then every time we move up a little bit in the market, Bitcoin goes up by $10,000. There we are back at that threshold for crossing over that euphoric Nupa line. So I'm glad that hopefully we should see a lot more cool down in that respect. Now, the next one is just a Pull multiple. I think it's Pull or Pull multiple. This one, although I'm not a mathematician, I am not a financial advisor, I'm not an oracle, nor a fucking wizard. I did pull up the Pull multiple just to look up. So it is the daily coin issuance in US dollars divided by the moving average on a 365-day multiple divided by or multiplied by daily coin issuance USD. I'm not going to sit here and pretend to explain that equation to you. I'm not here crunching the numbers, but essentially it has to do with whether or not the miners are in a profit or in a loss. Because eventually, as the Bitcoin that they mine becomes more and more scarce, those payouts are less and less, while the hash rate in the blocks that they're solving for and pushing through on the ledger become more expensive and more difficult to create. So after a while, it tops out. Like in 2013, we had the double peaks, and in 2017, and then we also move into a bear market. Well, right now, we're not close to crossing into that yet. And in fact, with this recent dip, it's going to reset us pretty nice moving forward. And you can see we had some pretty harsh corrections back in 2017, right before pushing up into that parabolic range towards the back end of the bull run. So just another thing to keep in mind. Now, if we look at spent output profit ratio. So this has to do with whether or not people are in a profit with what they purchased. So if you have so many people that are in profit and people aren't selling, you're crossing over the Newport. But as that market starts to come down and there's a crash, there's also a point where a majority of people would be holding at a loss. And you don't want to cross too far below that because people do not want to be in the red. They want to still be in profit. And people that got in early or people that bought a lot previously are still in profit. Although I'm hurting a bit in looking at my profile, it does suck. I'm still well in the green, and you will eventually get back down to this threshold where how many people will cross over into not being in profit. And you can see pretty consistently in the past, we bounce off that location and we would then reverse. So just another thing to keep in mind. Now, the one that I think stands out to me the most, and hopefully I'm not blocking this too much, this has to do with just the amount of Bitcoin moving off of exchanges. So this is, the green is increasing liquid supply, which means Bitcoin are being put onto exchanges or being sold or are available. And then red is decreasing liquid supply, which means they're being removed and they are being moved into cold storage or off of those exchanges, not for sale. So as you can see, minus that little bit of dumping period that we experienced when the miners were selling or other people were selling, we are now just increasing more and more in the amount that's being removed from exchanges. So when I think about this in total, yes, the price can go down on the exchanges and they can paint the charts, or we can liquidate ourselves and panic and go all over the place. But in the general sense of supply and demand that the stock to flow model is based on, and that a lot of these other things cover, it comes down to Bitcoin is still leaving the exchanges at greater rates than it's being put back on. And as that supply diminishes, eventually it will reflect in the price. And if people can be shaken out and we can buy it for cheaper because they panic and you don't have an understanding as to why it's dropping or what's going on, then that's better for those that do. And that's why I have this channel. It's not to sit here and say Bitcoin's going to the fucking moon every day like a lot of these TA people, but it is to explain that there's a reason behind why everything occurs. And even if it doesn't line up every time with your technical analysis or your fundamental analysis, sometimes it also has to do with the giant players at hand. If you have an asset that is looking to take on the possible role of the future reserve of the entire globe, there will be volatility. There are going to be people with big stakes to either gain or lose. And there's going to be, things going on behind the scene that drives that further. And I do believe that we're going to hear about some big institutions that bought during this dip and not only were reflecting on this chart, but also find out who were some of the people that were buying in large quantities from exchanges like Binance. And then finally, if we want to talk about exactly why everything was dumping, I still think we do have to take some blame in the crypto community. So this was on the Wall Street Journal, behind Bitcoin's recent slide, imploding bets and forced liquidations. So keep in mind, in my last video, I did say that $10.1 billion was liquidated when we had that flash crash from 61K down to 50K. That was because people were too over leveraged. Everyone was saying Bitcoin is going to 70K tonight. Altcoin season is starting. And there's no room for conversation as to whether we could dump now, as to whether maybe we might be overheated. And when I talked about dropping to 47 or even 41 in the last video, it's not because I think that everything has to crash right now. But I know that without those dips that we saw in 2017, without removing all the extra weaker hands from the market, without sort of evening out the road, we are going to just burn ourselves out before we can really get to the back end of the rally where a lot of the big earnings and money is made. So if you are newer to this space and you did panic sell, or maybe you didn't get to watch any of my previous videos, that's okay. Do not go in and try and just buy a bunch of stuff back and panic buy if it reverses and starts going back up. Take the time to take a step back and think as to why these things are valuable. Do your own research. Make sure to educate yourself. I am not a financial advisor. I didn't have a mentor when it came to this type of stuff. And honestly, I still admit that I could be wrong. But in doing all this additional research and understanding the investments that I make, I can make better decisions. And although it's stressful, sleep a little bit better at night with a stronger level of conviction, because I'm not just panicking, staring at the number. I'm looking behind the scenes as to what is causing that to happen. So hopefully this video gives you a little bit of peace of mind, and I'm open to any comments or any discussion that people want to have. If you could, go ahead and like this video. If you know someone that has been absolutely panicking the past couple days, share this video with them. I'd be happy for them to see it, just so that they can have a better idea as to what's going on behind the scenes. And as always, I am absolutely honored that you came to watch this episode of Viva La Coin, and I will catch you guys next time.